Hi looters, welcome back to Tick to Loot market updates for August 12th, 2026. We got a packed agenda. A quick look at yesterday's big moves, a deep dive into today's key economic releases, and some market context to keep you in the loop. Remember, this video is for educational purposes only and is not financial advice. Markets carry risk. Always do your own research and consult a licensed financial advisor before making any trading decisions. Let's start with what happened yesterday. The Reserve Bank of Australia released its cash rate decision, leaving the benchmark at 4.35%, exactly where the market expected it. Alongside the cash rate, the RBA's monetary policy statement and press conference reinforced a steady hand approach, signaling no immediate shift in policy. Because the decision matched forecasts, the impact on the Aussie dollar was muted, but the high-impact label reminds traders that any nuance in the language can still sway sentiment. Across the Eurozone, Italy reported its trade balance for July. The figure came in at 4.74 billion euros, a touch below the forecast of 4.79 billion, but still positive. While the deviation is modest, a lower impact rating means it won't dominate headlines. Yet it adds a small data point to the broader euro area trade narrative and may nudge the euro marginally in the short term. Why does the RBA decision matter? A steady rate suggests the central bank is comfortable with the current inflation trajectory, which can keep the Australian dollar relatively stable against its peers. Traders often watch the tone of the statement for hints of future tightening or easing. In yesterday's case, the lack of surprise kept risk-on sentiment steady, allowing the AUD to hover near recent levels as markets awaited other global cues. Moving to today's calendar, the headline high-impact release is the U.S. Core Consumer Price Index for July. The consensus forecast is a 0.2% month-over-month rise, up from a flat 0% in June. Core CPI excludes food and energy, so it's a key gauge of underlying inflation pressure. Because the Fed watches this number closely, any deviation from the forecast could shape expectations for monetary policy in the weeks ahead. Goldman's chief economist, Martin Hatzius, recently hinted that July's CPI could be very tame, around a 0.05% headline rise and core near 0.19%. If the actual numbers land close to those expectations, the market may view inflation as more benign than anticipated, potentially easing pressure on the Fed's rate hiking cycle. Conversely, a surprise uptick could reignite concerns about price momentum. Either way, today's core CPI is a pivotal data point for gauging the trajectory of U.S. monetary policy. Next up, Germany will publish its final consumer price index for July, also a low-impact release. The forecast is a steady 0.8% month-over-month increase, matching June's reading. Because the number is expected to hold steady, it likely won't cause major moves in the euro, but traders will still compare it to the broader Eurozone inflation picture to see if price pressures are uniform across the region. Germany is also holding a 30-year bond auction today. The previous auction saw a yield of 3.64%, with a second tranche at 2.9%. While the auction's impact rating is low, the results can provide insight into long-term funding costs for the euro area and may subtly influence the euro's direction, especially if demand deviates sharply from expectations. Over in Japan, we have the preliminary machine tool orders for July. The forecast is a robust 52.8% year-over-year increase, reflecting strong demand for capital equipment. Although the impact is low, such a jump can hint at the health of Japan's manufacturing sector and may feed into broader sentiment about Asian growth, especially if the actual number confirms the forecast. Canada's building permits for July are also on today's agenda, with analysts expecting a 0.8% month-over-month rise after a dip of 1.7% in June. Permits are a leading indicator of future construction activity, so an improvement could suggest a rebound in housing and commercial projects, adding a modest bullish tilt to the Canadian dollar if the data meets or exceeds expectations. Putting the pieces together, the market enters today with a mix of signals. A potentially tame U.S. core CPI could ease inflation worries, while steady German inflation and a solid Japanese manufacturing outlook keep the euro and yen in a cautious stance. Meanwhile, the Canadian permits data may add a touch of optimism for the loonie. Overall, traders are likely to watch the U.S. CPI closely, as it could tip the risk-on/risk-off balance for the rest of the session. That wraps up our market snapshot for August 12th, looters. Remember, we're just breaking down the data. No trading recommendations here. If you found this update useful, hit the subscribe button and ring the bell so you don't miss tomorrow's Tick to Loot briefing. Stay curious, stay informed, and I'll see you in the next video.